Welcome to today's morning report. Charts appraisals on Tuesday the 6th of September with me, Richard Perrin, market analyst at Hantech Markets. Relatively sort of subdued start to the trading in the European session really. We've got no real movement on these equity markets. Slightly higher, slightly lower. Interesting that FTSE is underperforming, and that underperformance is sort of coming as sterling is rallying. Now, generally across the Forex majors, the dollar is under a little bit of pressure. Not too much. Slightly corrective pressure today. It's sort of underperforming against all the Forex majors apart from the Swissy, but sort of sterling is higher again, and that sort of that strengthening of sterling, which has been ongoing in the last sort of couple of weeks or so, has just started to put a bit of downside pressure, a little bit of underperformance, I think I should probably refer to it as, on FTSE 100, and I think that's something that we need to keep an eye on now with the improved data in the UK. I think sterling could be a more of a positive performer generally, and I think that will hit FTSE 100 going forward. So in terms of where we're looking out for as well, also the oil price, which has been, if I can actually get it going. Not responding. Here we go. Oil price. Oil price jumped yesterday. There was a lot of volatility yesterday on the back of an agreement that's put in place between Russia and Saudi Arabia over potential for sort of production or cooperation, I should call it, cooperation on production. Because they're looking to stabilise the market, and obviously that will be a positive for the market. But how sustainable is that, and will it happen? It's very, very questionable. I think Iran and Iraq presumably would again be key swing issues there, but we'll wait and see how that pans out at the end of the month. But will it actually make a real sustainable difference to the oil market? Again, questionable. But generally speaking, the dollar is sort of under pressure, and that is a bit of a theme since that payrolls report, really. And we had Labour Day yesterday, so you didn't really have too much indication exactly where the dollar was going to be moving. Obviously, we've got the US back online today, so I think that today we'll get more of an idea exactly where the dollar is going to be going near term. But I think pricing out of a September hike is likely to be seen, and we've got the ISM data today, the non-manufacturing PMI for the States, at 3 o'clock. 55 is the expectation there. Service sector PMI for the States, down from 55.5, which was a positive, really strong number last month. But we've just on the other day we had the manufacturing PMI. The ISM manufacturing data for the States, and that disappointed. So it's going to be taking a bit of a focus today. I think this could well be a pretty volatile number around 3 o'clock today. But in front of that, we've had the Aussie, couple of factors out of the Australia actually. We had the Reserve Bank of Australia giving its monetary policy update, 1.5% holding interest rates. No movement there on Glenn Stevens' last monetary policy meeting as governor, and that has subsequently led to a bit of a strengthening of the Aussie, but driven mostly, the strength was coming on the back of this deficit number, this improvement in the deficit, which was surprisingly, I say improvement in the deficit, better than expected deficit. Expected to be down at 19.75, it's actually 15.5, which is slightly below last month's, but still much better than expected. So the Aussie has strengthened on the back of that. So that takes me to my chart of the day, which is the dollar Canadian loonie. And dollar Canadian loonie has been gaining traction again to the upside. This one is a range play, I would say. Sort of the last few months, really, we've seen it sort of ranging quite consistently. 26.50. 27.60 was the low in August. I think we're probably going to retreat towards that sort of level. You've seen a sort of basically the momentum indicators and the RSI and the MACD lines all basically become increasingly neutral. Dropping below 50 tends to be a bit of a negative near-term outlook for the technicals. Certainly the stochastics gaining traction to the downside, also the MACD lines turning lower again. So this is all sort of pointing towards a near-term corrective move, but I think back towards 2760 is likely to be seen. Retesting of that August low could well be in process. 2830 was a bit of an interim low, and again that sort of comes in as your initial support. That's about 70 ticks away from where we are now, but generally speaking, I'm back towards 2760. I think is likely to be seen, and that is a bit of a pivot, isn't it? Bit of a level that's been tested on several occasions. So 2760 is likely to be seen. I've also got this green line in here at $1. Sorry, at 130. Sorry, zoom out. Which is again a bit of a pivot level, but is also sort of, you'd argue, almost round number resistance, isn't it? 130, and that has been a bit of a turning point consistently, often seen. Certainly in the last sort of month, 6 weeks, 130 was a big floor, became resistance marginally, broke up, supportive, broke down again, became resistance yesterday. So I think 130 is a key level on the upside. So 130 would be your ceiling in place, I think, near term. Obviously the levels at 3150 is sort of key really for the resistance, now being that lower high in September. But generally speaking, I think 130, and you can see that here again, tested yesterday before falling away. And again here, a bit of a pivot level on the near term chart as well, so something to watch there. But very near term, you could argue today's high, which is 29.33. Also a reaction high yesterday was 29.50. So between sort of 29.50 and 30 big figure, I think that would be around about where you'd see the next lower high potentially. But I think this one is tracking back towards the 27.60 area, and it's likely to see a retracement and a continued sort of move as a range play really. And I'll very quickly show you the Bollinger Bands, which you can see on this chart, basically going sideways over the past sort of few months, again indicative of a range play, and dropping below the moving average of that. You'd sort of expect this to now move towards the bottom of the Bollinger Bands, and 2780 is where that bottom Bollinger Band comes in. So it all pretty much ties in with that. So I wish you good luck in your trading today on the dollar Canadian, and I will speak to you later. Thank you.